With a historic third quarter now behind us, it's time to turn our attention to the home stretch of 2022. Fortunes were made and lost over the past 3 months. How did your account fare? If the past 90 days left you in the red, then do not worry. There will be countless trading opportunities from now until New Year's Eve. And it all begins with this week's rollover into October trade. Hello, I'm Nick Quinn and this is your weekly markets preview for October the 3rd, 2022 from the team at forexsignals.com. The coming 5 days will kick off the last quarter of the year with a rich mix of central banking activity, manufacturing data, key agricultural reports and that all-important NFP jobs data out of the US on Friday. Let's examine the key events on this week's docket and pinpoint a few markets worth targeting. So the first thing to potentially focus on for Monday is going to be the UK manufacturing PMIs for September. Now we're looking for a lower print on that 46 off the previous 48.5, and given how much volatility we've had in the UK, in sterling, in the gilts market, there's no question that that is going to bring the FTSE 100 into sharp focus for Monday. So if we look at the actual monthly chart itself, just starting there, you can see we are now buried deep into this leg from the COVID pandemic lows of March 2020 all the way up to 7,692 this year in February. From here, I suspect that we are going to have more downside in the FTSE. Just taking it down to a daily, you can see that we've broken out of this potential pennant area that didn't completely fully form the way that we thought it was going to, and we've broken to the downside. Now, just pushing into this support zone here of 6,965 all the way down to 6,680. Now, our March lows this year from 2022 come in here where this red line is here that you can see 6,755. That's going to be the next potential port of call, and if we've got enough bearish momentum to push lower than that, that's going to bring the bottom of the support zone here well and truly into focus at 6,685. So is there going to be upside from here? Be honest with you, I can't see it given the volatility that we've had over the last week or so, particularly in sterling and the gilts. So that would put a cap on potential equity prices in the UK at around about 6,962, just the top of that support zone. Tuesday is set to feature the first of 2 central bank hikes this week. First up is the Reserve Bank of Australia, and the market is looking for a 50 basis point hike in interest rates from 2.35 up to 2.85. Now, there has been some dovish dialogue out of the RBA over the past few weeks, basically in the sense of saying don't expect interest rates just to keep going up and up. There could be some leveling off in expectations, and what that could potentially do is cause a dovish reaction to the announcement if potentially the RBA actually underwhelms and only increases by 25 basis points. There'd be demand in the bond market, and obviously, of course, we would then see demand in the Australian dollar. So it's worth paying attention to the Australian dollar very much on Tuesday. And as you can see here from this daily chart, we have very much found support in this this area from 2020, April 2020. We have broke to the downside, the swing low from here in July this year, but it's now a question of like if we did get a slightly dovish reaction out of the RBA on Tuesday, that could potentially solidify support down this area. So I wouldn't rule out a potential reversal in fortunes here for the Australian dollar. If we just look at it here from a daily perspective, you can see that we maybe even a flush lower below 63.63. If there is any sort of like new support under there, that would rotate the Australian back higher, and then it potentially opens up a move back up. If we look on a 1 hour chart, opens up a potential move then back above the recent highs of 65.31, and then a potential extended move up to the 66.81 area. Wednesday will be dominated by the Reserve Bank of New Zealand, and the market is expecting 50 basis points out of them, hiking to 3.5. Now, GDP growth has been particularly good in New Zealand, and 1.7 for July, certainly better than a lot of the other developed economies at the moment, and it could potentially bring into question whether there is going to be a turnaround point anytime soon in the New Zealand dollar. Now, just looking at this monthly chart here, you can see we are sitting right on top. In fact, we've closed September right on top of the close for March 2009. So it's a big monthly structural level. We are trapped now within this range as well, starting at 59.79 all the way down to 54.98. We do have some potential bearish momentum to the downside, but it's going to be interesting to see how that actually plays out. If we look at it on a daily, we can just see how we have closed the month just holding that level. So it's quite a critical area now. Look at the MACD. There is still a huge amount of bearish momentum still left in the market. So if we do break to the downside, 54.95 is going to be well and truly in focus. If Wednesday's announcement does act as some kind of rotation in the New Zealand dollar, that's going to potentially then create a bull market, which would then lead us back up further of the down leg that we've created this year. But I would say certainly within the next couple of weeks that will be well contained within this support zone, the support range here, with the top end of that coming in at around about 59.70. The World Agricultural Supply and Demand Estimates report will be out midway through the session on Thursday in the United States, and it's going to be a particularly interesting one given where we are now in relation to the harvest in the US. Focus very much on corn. Corn exports in the US are up 11% over the course of the last 12 months, so we do have a potential bullish breakout starting to maybe materialize now on the corn market. This is a weekly chart of corn that you can see at the moment, and you can see from those wicks on the weekly, there's a lot of compression now in this market, and we're looking for a potential upside breakout. MACD down here at the bottom, you can see that MACD line's just crossed over the moving average, so potentially there's no more bearish momentum left in this market. Taking it down to a daily, you can just see that there is potential support yet to be tested down here at the swing high of August this year, coming in at $6.54. But from there, if we did get a flush down there, that does open the door to a potential momentum play to the upside, breaking above current resistance at $7.12, and then that would open up the resistance area above, potentially for a move all the way up to $7.60. Finally, for Friday, all roads will lead to the non-farm payroll data release out of the US. The market is expecting a lower number on non-farm payrolls this month, 250,000 off the previous 315, but we are anticipating that the employment rate is going to stay pretty much stable at 3.7%. Now, all markets are going to be in focus on Friday, so it's a question of taking your pick, really. Our focus is going to be around gold, which has enjoyed a very, very nice relief rally this week after short covering, after bouncing off this monthly swing top here, this monthly swing high from January 2020. So if we just zoom in now on the daily, you can see any potential upside here for gold is we have closed well. We've closed the month for September well, just contained under this resistance area from the middle of September. To get higher from here, I would personally want to look at holding this these two areas here. 1653s down to 1642. If we can hold that area into non-farm payroll, that could potentially then lead to some upside in gold, which would open the door to a move back up further up the leg into this resistance area here, starting at around about 1691. And don't forget, you can read our full weekly preview report anytime that you like by simply scrolling to the bottom of the homepage of our website. On the far left, simply click on Forex Forecast. So if you only consider the events that we've covered, you can safely anticipate a robust start to October trade. However, there is more. Don't forget about Germany's manufacturing PMI on Monday, US ISM numbers on Monday and Wednesday, Australian retail sales on Wednesday, and the ECB account of monetary policy meeting on Thursday. Each of these reports has the potential to roil markets and spike volatility in short order. After last week's turbulent end to quarter 3, will Q4 bring a broad-based recovery in risk assets, or will bond yields continue their march to the stars? How about crypto? Can Bitcoin close the year above $20,000? No matter what happens, one thing is certain: opportunity will be knocking on our collective door. Be sure to tune in for our analysis of the weekly Asia Pacific Open, and don't forget we'll be providing you full coverage of non-farm payrolls live on YouTube this coming Friday, October 7th. Until then, from the team at Forex Signals, trade well, and we'll see you in the next live stream.